Chin Loo, why are you liking it so much? What's your short-term forecast on it?
Well, short term, I think there are a lot of factors that run in favor of this, a cross-currency funding play. One is that we do expect the yen to weaken because amongst all the central banks, the BOJ is still the most likely to want to maintain rates at a low level for an extended period of time, plus the fact that they've made it as well a well-known secret that they could adopt more quantitative easing that should as well weigh on the yen. On the converse side of it is the RBA, which we know to be still on a tightening path. And even if the data we just saw was a little bit disappointing, I think it does not take away the fact that interest rate differentials between the Australian dollar and the Japanese yen are likely to widen, and that will be a factor as well that should support the Aussie dollar against the yen.
What's the biggest risk for this cross?
Well, I think the biggest risk has to be, like we saw some disappointing numbers out of the Australian economy, or let's say if there was a setback in risk-taking appetites, such as commodity prices coming back down and the US dollar regaining its footing, then that will certainly pull the Aussie dollar down lower against the yen.
You're liking the yen-Korean won cross as well. What's behind that?
We've maintained our liking for this cross since the start of the year. I think the key driver is clearly as well economics, where the Korean economy is doing very well. The BOK has not yet hiked interest rates, and the new Bank of Korean governor has made it quite clear as well that they are in support of the government to try to provide as much support to the Korean economy as possible. So rate hikes will still remain fairly tempered, but even then, I think the next phase of rate move will be a tightening, and the story of widening interest rate differentials as well apply to the yen-won cross. Apart from that as well, we've had fairly strong improvements in sentiment towards Korea, and capital inflows into the economy is still very strong, particularly towards its bond markets, where the Korean bond market could be upgraded and put into the developed bond market, and that as well could engender another strong inflows into Korea that will support the Korean won.
Chin Loo, risk appetite seems to be rising. Commodity currencies benefiting from that, obviously. Do you see that continuing?
Yes, we do see that continuing. I think the underlying factor that is driving risk-taking is that central banks remain very supportive of maintaining accommodation in the market, or at least removing them at a fairly rapid pace, largely because inflation pressures are not really threatening at this stage. And core inflation, if we strip out the volatile food and energy prices, that remains very subdued. As well, with lending not picking up in a big way, there really isn't any reason for the central banks to want to tighten monetary policy aggressively. So whilst output gaps are still quite wide, we think that central banks will remain very accommodative, and that will be one of the key features that supports risk-taking.
In terms of carry trade, Chin Loo, where are we right now? Is that still the story at the moment?
Well, I don't think carry trades have been a big feature in the market so far, largely because there was still a bit of uncertainty in the global economic landscape, not least what's happening in the Eurozone. However, I think we are close to a point of achieving some sort of turnaround in the European markets because of hopefully a solution on Greece and fiscal deficit issues there. So if that comes to light, then we could see more fund inflows get back into the risk trade again. We are seeing that already in Asia, where Asian stock markets, for example, have broken higher, and Asian FX have been marking a stronger ground in the recent days.
Okay, you touched on Europe. Let's take a look at the euro. More volatility on that front?
Yes, I think so. I think even though if there were to be a Greece settlement, I think the issues facing Eurozone governments, that is the fiscal deficit issues and how they can come to the market to raise the necessary funds, that's still a fairly strong overhanging factor onto the euro. So I think that euro will remain the underperformer amongst G7 currencies, and against that we still like to trade, for example, the Euro-Aussie cross. I think that will do fairly poorly, and the euro will continue to be underperformer. We've continued to like other Asian currencies in particular against the euro, so I think that's a play of consideration as well for market investors.
So fair to say that the euro is currently undervalued? I mean, it's fallen almost 6% versus the dollar this year.
Well, it has, and there's very good reason for its underperformance because of the fundamental issues that's facing Eurozone. And in contrast, if you compare Europe's balance sheet with Asia, it clearly is a very stark, reminder of where the strengths are, and global monies are certainly flowing along those lines.
Chin Loo of BNP Paribas, thank you so much for that.